Okay, so for profitability ratios, we calculated net profit margin, gross profit margin. One of the things that there are a lot of ratios to calculate, as I've always stated, a lot of ratios. So one of the things I would calculate is return on assets. Return on assets. Now, the reason I'm doing that is I want you to see how it coordinates with asset turnover. So if you take return on assets, right? If you take return on assets is simply your net profit over your total assets. So if you take your net profit, which is your profit after tax, divided by your assets. Am I doing the right thing? Yes. For your total assets, then you should have you should certainly have your return on assets. Now, this return on assets, you see that the return on assets has declined. The return on assets has declined. Now, what does this mean? You know, that's what I was saying. Always look at the ratios. They work hand in hand. They work hand in hand. So if you look at return on assets and you look at asset turnover, you see that they are all declining, right? Because return on assets declined, asset turnover declined, because at the end of the day, right, return on assets is looking at the profits over the assets. Asset turnover is looking at sales divided by net assets. Since our sales is down, our profit too will be down based on SBL's financials. Based on SBL's financials, that's what's happening, right? So this gives you some information going into the exam. There are a few things you know that turnover is a problem. Liquidity might be a challenge. Debt seems to look here and there. And also things like collection seems to be a problem. So these are things you go into the exams with. It's very, very important. Very, very important. Any questions on this before I move on to some other thing? Any questions? Okay. Seems like there are no questions. So another thing also that is also a possible ask in the exam is what we call a profit forecast. It's what we call a profit forecast. So I think in the case we are told that SBL themselves, they do a profit forecast, or they have this profit forecast, and I think they've projected 0% growth. Correct me if I'm wrong. So one of the things that the ICA can do, which is also a possibility, which I put up in my likely questions, is that the ICA can give you, this is 2019, 2020, right? The ICA can give you assumptions around what turnover will look like, what gross profit will look like, what profit before tax will look like, what taxation will look like for the next 5 years. And that's something similar to what they did. And they did something like that in last sitting's exam, right? They did something similar. So for example, let's use an example. Please, are you with me? Let me know if you are with me today.
Yes, sir.
I've taken some medicine, so I'm a bit... Okay. So So this is what 2019 is here. Just know that 2019 is on, so I have to do, I'm just showing you how practically they can set up a question like this. So 2021, or it might not come at all. I'm just showing you. Right, 2024. Let me know if you can see my ears.
Yes, sir.
Okay.
Yes, I will start here.
So they can give you assumptions around each of these line items, right? So they, for example, they can tell you that based on SBL's forecasts, turnover might increase 2% every year. It might increase 2% every year. Now, if they tell you that you obviously, or 2% year on year, you obviously know what to do, right? It means that you have to multiply this 120 by 1.02. Right? I hope that makes sense. Then they can say cost of sales. These are assumptions that you are giving. And they can tell you cost of sales is 70% of turnover. These are all assumptions, right? Cost of sales is 70% of turnover from 2021 to 2024. Now, the reason why I'm using imaginary numbers is we don't have anything like that in the case. This is thinking aloud. So they can say, oh, cost of sales is 70% of turnover. So what would that mean? If cost of sales is 70% of turnover, what does that mean for your calculation? It means that your gross profit will be 30% of turnover. True or false?
So come again.
That is true, sir.
Okay.
That is true, sir.
So they are giving assumptions, because they are giving you assumptions because and this question, I'm just formulating it in my mind. I'm just formulating it in my mind so that you are aware of how they can set up some of these questions. And sometimes they'll be generous enough to give you the numbers, but in any case, it still helps you. So if turnover is, they can say for cost of sales in 2021, we don't know the number, is 70% of turnover. Cost of sales is 70% of turnover. Now, what does this mean? It means that gross profit is 30% of turnover. Does that make sense?
Yes, sir.
Okay, so
Yes, sir.
30% of, so that's what I mean by they'll give assumptions around the numbers. They'll give assumptions around the numbers. And then they can say operating profit. They can say that operating profit, then they can give you expenses. Expenses for 2021 was 20 or 20 million. So what would that mean? It will mean that we will say 36.72 minus 20 to give us the operating profit. Does that make sense? So it's possible that
again.
I should go over again.
The expense.
Okay, let me go over again. So first of all, how do you come to how do you, after from gross profit, how do you get operating profit?
Less operating expenses.
Yes, operating expenses. So they can say operating expenses for 2021 is 20 million. 20 million. So if operating expenses for 2021 is 20 million and you have your gross profit as 36.72, how much will be operating profit? To be 36.72 minus 20. I hope that makes sense.
Yes, please.
Yes, sir.
Then they can probably give you a profit before tax number. Can give you a taxation percentage to calculate, your taxation, in that order. Or I should go through. I hope you get what I'm trying to do.
Yes, please.
Yes, please.
So it all depends on the assumptions. I'm just giving you like assumptions. It could be, they will literally tell you, okay, based on SBL circumstances, we think that their profit before tax will be, let's say, 10 million. Okay, 10 million. And their tax is 30%. So if their tax is 30%, 0.3 times 10 million, right? 0.3 times 10 million will give us their tax. Then their profit after tax will be 10 minus 3. Then they'll say they probably paid a dividend of 1 because they were struggling. Then their retained profit was 6 or something. Very, very simple. So they'll give you assumptions. They'll give you assumptions like that you can use. I'm not saying it's going to come, but it's possible. I might be wrong on this, but let's see what happens. Because they mentioned it in the pre-scene, they might be generous enough to, give you the profit forecast in the other information that they'll present in the exam, but maybe they might not. So it's also possible that they can do this. And based on that, you can get your profit forecast. I hope that makes sense.
Yes, sir.
Okay. Please, is everyone following? Abigail, are you following? Okay. It seems like people are following. Okay, so yeah, so that's it with the financial side of things. That's it with the financial side of things. Now, when you move on to, let's look at the qualitative side. Let's look at the qualitative side. There are a lot of things to talk about in the qualitative side. So these were the main issues identified by the board, right? Board remit and effectiveness. Now, the board is trying to find solutions for these things. So as going into the exam, can you see my Word document?
No, sir.
No, we can't see.
It has come.
Okay. So going into the exam, what you want to go into the exam is go into the exam with an understanding of some of the possible solutions, right? One of the things I noted was that it will be good if they introduce some NEDs on the board to give it some balance. That's the one thing I noted. Now, when you move on to evolutionary change, I don't know if someone else has something to add. But when you move on to evolutionary change, we realize that this company has gone through a lot of phases or a lot of cycles, right? You've gone through a lot of cycles. So where do they have to undergo evolutionary change? One of the key things you need to know is that you need to always remember, right? Always remember this thing. If you are struggling with giving recommendations, let's say if they are pinning you to the wall, give some recommendation, you are struggling, always remember the 4 P's. Always remember the 4 P's. So if they are talking about evolutionary change where? Is it in terms of their product? Is it in terms of their place, their promotion, or their price? Where do they need to have changes? Where do they need to have changes? One of the things we came up with was their distribution strategies. Their distribution strategies were more capital intensive, and looking at how business is evolving or the evolutionary changes taking place generally across the globe, it might be right to use some technological tools to serve customers. It's very, very important. It's very, very important. Yeah, so that's one of the things that I noted. Now, the second thing I noted was in terms of their pricing, this company is a traditional company that has been there for some time. So how pricing was done, when it started, they probably didn't have as many competitors as they used to. And so pricing was done in a certain way at the time, right? Now we want to understand, is this pricing method still relevant? Is this pricing method still relevant in the face of intense competition? Is it still relevant? So there are different pricing strategies that SBL can deploy in order for them to gain ground, in the market they are in. It's very, very important. Now, you tailor your pricing to the market. You tailor your pricing to the market. So, for example, in Ghana, if SBL wants to penetrate a certain market, let's say the market in Sierra Leone, right? One of the things they could do is use a penetration pricing model to be able to, at least gain some ground in the market. Another thing we never heard about is promotion. I don't know, do pharmacies even promote, or pharmaceutical companies? I think they do. But one thing we never hear about in the pre-sim material is promotion. I don't know if there's someone come across anything surrounding promotion.
No, sir.
Yeah, they never talked about promotion. So that's one area I would look into, especially when the pre-sim material goes blind on it. You never know what happens in the exam. Another thing that the board also raised is the digital opportunity. The digital opportunity. The 21st century, as we all know, technology is changing a whole lot of things. So one of the things SBL should invest into is digital technologies. Of course, it requires some investment. So you would want to understand how you are going to fund these investments and the potential benefits you are going to reap over time. Any questions?
Yeah, I've got one. Please, the digital opportunity. So, would you have to specify the area that the digitization should take place with respect to the division, either the manufacturing, retail, wholesale?
Do you have to specify?
Yes, if you have probably some specific technological work that you think can support either maybe the manufacturing division or the retail.
I mean, you just have to look at what the case is presenting you. And the reason why I mentioned retail here is that it's just the way distribution is done these days, right? And so that clearly is obvious that some digitization that is important. But obviously, as they give more information on the case, and you think that manufacturing certainly requires some form of digitization or some form of technological improvement. So if you think that, as they give more information, if you think that that's something that should be recommended, why not? I mean, you want to make sure that your organization has a grasp over digitization, the entire organization, so not necessarily only a segment.
Okay, so when you, in your answer, if you give an example of the use of drones for inventory counts in the manufacturing division, stating specifically the particular technology that you think can help, if you add that to your answer, will that go away to earn you more marks or something?
Sorry, would that go away to?
Will that go? Will that add more marks to your answer, or you just state generally that they should do technology? There should be technological improvement in these areas.
Well, of course you should. Of course, you should give examples. If you can, you should give examples. Like in any case, you should give examples. Yeah.
Okay, thank you.
Yeah. If you certainly can, you should give examples. Yeah. Okay. Then you move on to things like hands-on farmer experiences. Hands-on farmer experiences. One of the things you'd realize is that I don't want to say a lot, but some of these directors have experiences, hands-on experiences that are not necessarily pharmaceutical related, So what is the solution to that? What do you guys think? How will you solve the hands-on farmer experience problem? How will you solve the hands-on farmer experience problem?
You can solve the hands-on farmer experience by probably employing or appointing directors who have more experience in the pharmaceutical industry instead of getting directors from other industries.
Okay. Another way you can do that is also, this is a long-term approach, which is to, I don't know exactly what will happen in the additional information, but you would want to retain, your people. You want to retain your people. You don't want to lose them to customers. So for example, if someone has been in the firm for very, very long, just like how Edwin, knows a lot about the firm, you'd want to retain people like them because people like that are very, very valuable to your, to your organization. So it's twofold. One is acquisition, and number two is retention. Acquisition and retention. Right. So like what Caleb was saying, right? What Caleb was saying, acquisition, like who do we appoint? Who do you recruit? It's either you recruit people who already have farmer experience, and you retain the people in your organization who have loads of experience and find ways of developing and training them and improving their skill sets. Another thing was winning in emerging markets. Winning in emerging markets.
Sorry, please, I have a question.
Okay.
The hands-on farmer experience. Do you mean someone like in the case Gladys, who is a qualified pharmacist, or someone who, well, let me say someone who knows about pharmacy, like chemicals, combinations, and stuff?
Sorry, could you repeat what you said?
Ask if we can really explain what the hands-on farmer experience means. I was trying to find out if it can be compared to someone like Gladys, one of the directors, who is a qualified pharmacist. Yeah, I don't know if I'm clear with the question.
Oh, okay. What do you guys think? When we say a hands-on farmer experience, what does it mean?
I think the word speaks for itself, hands-on farmer experience. So like you've actually gotten your hands dirty in pharmaceutical experience. Let me use that crude word. So it's like you have been through, the left and right, the do's and don'ts within the pharma experience, the pharmaceutical industries. So that's my explanation of the hands-on pharma experience.
Yeah, so when we say hands-on, it's not like book knowledge. It's not book knowledge. So we want someone who has done it, like, day to day, is doing the thing. People with practical experience. So when we say someone who has hands-on accounting experience, not someone who has the ICA, but someone who has actually done accounting or worked in an accounting firm, has the experience. Does it make sense? So when you talk about winning in emerging markets, that's one of the things the board reads. So we would want to think, okay, what will be some of the possible, recommendations we can give here? One of the things that you do to win in a market is to do very, very, very good research. Very, very good research. Now, when you're doing the research, what are you trying to find out? You're trying to find out the characteristics of the market, right? Okay, what the market is, what the market is trying to buy, what the market is looking for. So that's one of the most important things. That's how you win in the emerging markets. So what should be done and how it should be approached? First, understand the markets. You must understand the market. And once you understand the market, you're able to launch into the markets. Now in markets that SBL are already in and are trying to, gain their foothold in those markets, it's very, very important to know that you structure your recommendations around the 4 Ps. You find areas in the 4 Ps where you can gain some competitive advantage. That's how you can win. So for example, if you look into a certain market and they are not providing OTC drugs, over-the-counter drugs, is that an area that SBL can go into because no one is doing it? So those are the questions you ask yourself. Am I making sense?
Yes, please.
Okay, now you move on to key strategic issues. Now, key strategic issues, there are a lot. The strategic issues, there are plenty of them. So number 1, competitive advantage. You can achieve competitive advantage in several areas. People achieve competitive advantage through the product they are offering. Some is how they, place the product. So it could be different ways. Now, another thing is the external environment. What is happening in the external environment? That's where the PESTEL framework comes in, and we will talk about that, extensively as we go through. But here, I talk about things like the political factors and all of that, but we'll go through. Because of the issue around the number of employees assigned to the export department, one of the things I thought about was resource and capabilities. So this is where you do a resource audit. You undertake a resource audit. Now, what's a resource audit? A resource audit is simply, trying to find out what kind of resources do I have, and are they able to meet my needs as an organization? So in a resource audit, that's where we find out, will it be wise or prudent to move our resources from manufacturing to, let's say, the export division? These are all questions you ask. Now, number 4 is stakeholder analysis. 5, goal congruence. Right? We want to make sure that the divisions we have in the organization, right? The divisions we have in the organization, the objectives are aligned so that we are meeting the overall goal of the organization. That's where goal congruence. We are making sure that the goals are congruent. One of the things I foresee them asking is something around divisions. When a firm is divisionalized, what are some of the advantages and disadvantages? When a firm is divisionalized, one of the advantages is that it helps the different departments or the divisions to focus on a certain area or certain focus, certain parts of the organization. So for the exports division, they'll be focused on all things related to the overseas stuff, right? The disadvantage of that is that sometimes these divisions can work in silos. They might not be working hand in hand. They might see themselves as different companies competing against each other. So when you go into an organization, you hear, for example, exports is saying, oh, we are doing well. We are doing well, but they forget that it's the entire organization we are looking at. Yeah, exports might be doing well, but the entire organization is not doing well. Another thing I also see them, which is possible that they might ask, is whether they should close down a division. Should they close down a division now? That's something bold. Like, for example, should they close down the manufacturing division? Do they need to actually manufacture? Can they source the goods from somewhere? These are questions that it's possible that they might be asked. Another thing is revenue optimization, scope. When I say scope and focus, I'm talking about the divisions, the different divisions, their scope of activities and their focus. does it all come together to meet at the overall strategic objectives of the organization? Yeah, so it's kind of like related to 5. Now let's go through the models. Does anyone have any questions? Any questions? Okay, so today I'll call out people. Felix. Mr. Felix. Today is the last day, so I'll call out people. Today is the last. Felix, can you hear me?
Hello, sir.
Is this Felix?
No.
Dennis, do you have a question?
Yeah.
Okay. When you are done, then
You,
Felix.
yeah, you propose that they can ask a question on is it advisable to close down a particular division or not?
Yeah.
I wanted to know if a question like that is being posed, what are the things that we need to look out for to properly address it?
That's a good question. Okay, so let me throw it back to the class. Before I even come, what are some of the things you look out for before closing down a division?
Okay.
If you have to.
Probably they can give you an extract of their that particular division's performance in terms of financially, if they have probably a segmental income financial statement.
Yes. Mm-hmm. Okay.
Okay.
Yeah, so in a case like that, they would they will give you some segment performance, division performance, division
Okay.
financials. Yeah. They'll give you a division performance. But the question he asked, I don't think it's been answered. Okay, if they give you the division performance, what do you look at? What will be the pros and cons? Right?
Okay.
Before you shut down.
I think
down.
Probably, if it's possible to outsource that the services that division provides, they'll probably give you an estimate or an overview of the benefits they will derive from the outsourced one.
So somebody said the cost benefit analysis. So this is where cost benefits comes in very handy, right? So you state that, okay, so what are the benefits of having that?
Okay.
That
So,
division.
can we also, as we learned in the cost management and those kind of stuff, can we also bring in this in the contribution that that particular division gives? Because it could be that they are using the same plant for production, which is more of a fixed kind of something. So whether you close it down or you don't close it down, that fixed costs have already been incurred. So looking at the divisional performance, the financial analysis that one said can be given, assuming there's the operations use the same fixed cost and also the same plant for the production and everything. Can you focus on also using the contribution for your assessment?
So if I'm getting your question right, you are saying that
yeah, I'm saying that the division will have a turnover that is coming in, and then maybe the variable